Everybody told you the same thing. Find the lowest rate. Whoever gives you the cheapest number, that's your guy. I've been in real estate for almost a decade, with over 140 lenders that I'm partnered with. And I'm telling you this, chasing the lowest rate is how first-time buyers lose the most money. Not on the rate, on the loan they should have been in instead. I'm John Taw, mortgage broker. My team helps families in 49 states, and we're partnered with over 140 plus lenders with 400 loan products at your disposal. There are 4 big doors a first-time buyer can walk through: FHA, conventional, VA, and non-QM. Most people pick the wrong one because nobody ever explained the difference. But now, you'll be knowing. Before I get into this, one question. I just want your honest answer in the comments below. What type of loan do you think you're going to end up with? FHA, conventional, VA, or no clue? Type it below right now. One word, don't overthink it. One of my clients, let's call him George, self-employed, runs his own business for the past 25 years. He walks into 5 different big and retail banks, all of them saying no. Same reason every time. His tax returns don't show enough on paper. He starts to wonder if he is just not a home person and will never get qualified. But hold on to George. Don't let him go, because what those 5 banks told him was wrong. And by the end of this, you'll know exactly which door he was standing right in front of. And right now, here's what matters. His whole problem had nothing to do with rate. Here's what nobody told you. The rate is not the decision. The loan type is the decision. Let me ask you something honestly. Do you actually know which one of the 4 loans you'd qualify for? Or have you been just comparing your rates from someone who never asked you about your life? Here's the truth in plain language. Don't get hung up on the rate. The rate is the last 5% of the conversation. The loan type is the other 95. The right structure can save you tens of thousands of dollars over the years you own that home. A quarter point on the rate, that's a few dollars a month. So why is everyone screaming about rates and nobody talking about the fit of the loan program for the person? Be honest with yourself. Have you been shopping the wrong thing this whole time? Let me walk you through the 4 doors. Start with the one that most first-time buyers think is their only option. FHA, the Federal Housing Administration Loan. This is the one that everybody knows about. Low down payment, as little as 3.5% down may be possible. It's easier on the credit, easier on the DTI. So here's the question. If it's that flexible, why isn't it always the answer? Because FHA comes with mortgage insurance, and in a lot of cases, stays for the life of the loan. It can quietly cost you for years. And here's the part nobody warns you about. A lot of times, you're not even choosing FHA. The loan officer is just dropping you in there. You're getting dumped into it. Why? Because of the flexible structure of the FHA loan. And here's how it happens. A loan officer takes your income, divides it by a ratio, hits a number, and just drops you into FHA. Because they know that it's going to qualify. They don't read your documents. They don't pre-underwrite your file. They don't look at your real expenses. They just need a number fast enough to get you in the door. They're thinking about turnover time. And then they hand you a piece of paper that says you're pre-approved. A real pre-approval only exists when somebody actually pre-underwrites the file, reads every document before anything goes anywhere. One of my last pre-approvals, a buyer who was shopping around wanted to put less money down. She came to me with a number from a competitor. They told her she was qualified for $305,000 on an FHA loan. But when I actually read her file, not a ratio, the actual file, in her situation, she qualified for $370,000. So she is now in a conventional 3% down. That lazy shortcut wasn't just sloppy. It cost her $65,000 of a home she was told she couldn't have. And here's what gets me. She would have never known. Nothing surprises you at closing when the number's too low. It doesn't break. It just quietly takes from you. This is the one nobody catches. The fast number that's too low. And the buyer who never finds out what she actually could have had. Imagine buying a home with a 30-year mortgage and not qualifying for the house that you really want. You're just qualifying for less and settling just because you were put in the wrong program. That's not right. That's why I don't do fast numbers. I'd rather do it right than do it quick. Be honest with yourself. Is the letter in your inbox a real pre-approval, or is it just toilet paper with your name on it? Think about your situation. Is the FHA the door you actually fit, or is just someone parked you because it was easy? Quick, if you're still here, you're probably already realized you're about to pick a loan based on a number a stranger gave you over the phone. Stay with me. This next one is the myth I want to kill most. Conventional. Here's the lie I want gone for good. You do not need 20% down. First-time buyers can go as low as 3% down on a conventional loan. This may be possible depending on your situation. The difference from FHA? That mortgage insurance with conventional, it can come off once you build enough equity. It doesn't have to follow you for the life of the loan. So the real question was never FHA or conventional, it's where are you today and where are you going? Most people don't realize this. The better long-term door is sometimes the exact one they were told they didn't qualify for. VA Veteran Affairs Loan. If you serve, this is one of the most powerful doors in the entire system. 0 down may be possible. No monthly mortgage insurance. Being in the industry, this makes me wish I served. So thank you for your service. I had a veteran family, close friends in my family. They told us at lunch one day they were moving into another rental, saying that they could never afford to buy. My mom looked at me and said, "John, run the numbers." Within 2 weeks of that conversation, they were able to buy a home. Their offer was accepted. They brought minimal cash to the table. They didn't even know that they could buy a house, so they only used the cash that they had on hand. Their payment came close to the rent they were already paying. So they didn't keep renting, they bought. And because of the plans that we structured together, down the road, they could buy a second home and become investors. From generational renters into homeowners and future investors. That is what it's all about. That's the trajectory of generations. And that's a beautiful thing. I am so grateful whenever this happens. If you served and nobody ever walked you through your VA benefit, that's not on you. That's the bar being low. That's gatekeeping. Non-QM, this is like high on my favorite list. Remember George? 5 banks, 5 no's, about to give up. The door nobody showed him. Self-employed, 1099, business owner, no credit profile, cash only business. If your tax returns don't tell you the real story, this one exists for you. Bank statement loans, asset-based loans. Doors the retail banks won't even mention to you because they don't have them. Someone finally read George's numbers a different way. His bank statements, not his tax returns. He closed and he's a homeowner. That's a beautiful thing. And I'll tell you why I don't let people like George walk away. It's because I was denied by retail banks myself as a self-employed business owner. I've been that person on the other side of that desk. And here's a little bit more about me. Before I was ever licensed, I was calling banks on behalf of a refugee family at church. They needed translation for hospitals and different government things. And also it led to mortgages. We were translating for them, comparing products, and finding the loan nobody else would find. And that's when I learned the whole thing I built my whole job around. That's why I have such a passion to do my whole business around helping the people that was said no. For most people, the answer is almost never no. It's nobody looked hard enough. So out of these 4, how do you pick the right one? Here's the part that's going to surprise you. You don't pick a loan. You get pre-underwritten. I read every document before anything is submitted to the lender, so there's no surprises at closing. The loan finds you. The right door opens because of what we built to open it. I'm not shooting a rate. I'm structuring. I'm curating. I'm custom tailoring. The lowest rate doesn't win. The right loan does. It's truly about what's a comfortable monthly payment for you and if it makes sense at this time. That's the difference between somebody quoting you a number and somebody walking you through the whole thing. A lot of loan officers churn and burn. They never even read the file. They just put you in FHA. My team pre-underwrites every one of them. So here they are, side by side. FHA, easy to get into, but the insurance can follow you for life. Conventional, no, you don't need 20%, and the insurance can come off later. VA, if you served, this might be the most powerful tool you own. Non-QM, if the bank said no because of how you earn, this was built for you. 4 doors. And none of it was rate conversation. You've watched yourself walk past 3 of these. Which one were you standing at? If you watched this far, you already understand loan strategy more than most people out there shopping right now. So let me take this last bit of fear off the table. Remember what you typed at the start? Go look. If that answer has changed, if you walked in sure it was one thing, and right now you're not so sure, that's not you being confused. That's you getting educated in real time. Comment what you would put now. That gap between the old answer and the new one, that's the whole reason I made this video. And here's the rest of it. If you've been told no, or you told yourself no, hear me. A no from one bank is not a no from the market. It's a routing question. It's not if, it's when. And I'll walk with you until it's when. There's one piece I left out on purpose because it deserves its own conversation. How you actually come up with the money to walk through any of these 4 doors. Down payment assistance, DPA. That's the next video. Watch that one next. It's part most first-time buyers never even hear exists. Here's what I want you to do. And there's no pressure in any of it. First, breathe. You're not behind. You're earlier than you think. I put together a first-time home buyer's guide. It's free. It walks you through these 4 doors in plain language so you can see where you might fit before you talk to anybody. Link is below. If you'd rather just text me a question, there's the SMS option down there below. And if you actually want to run your numbers, let's just have a conversation. 10-15 minutes. After this phone call, you'll have clarity over your situation. Because clarity equals confidence, and confidence gets you home. I'll see you in the next video. Down payment assistance.